Welcome to you, friends. Welcome. Let's go through some strategy. This video is specifically for the yield farms on PulseX. What to do, V1, V2. I don't know what to do. You got to make your own decision. I'm just here to tell you what I would do, how I am interpreting it, and I'm going to lay out the options you have. So watch my previous video. The yield displayed was fake. It was fake. They were the wrong numbers. It was overstated by 500%. Not just the yield, but the fees. It said we were getting $50,000 of fees in the week, but actually it was like $6,000 or $8,000, whatever it is. So I want you to know, since I made the post, all right, since I made the post, people have been seeing the truth and they are starting potentially to adjust how much liquidity they want to have at risk. So what I'm showing here, look at this. Interesting to see now that everybody is finding out PulseX V2 of the yield farms, the display of the fees was incorrect. We now might see the real liquidity bond for eHEX and pHEX, right? What does the market really want to risk based off the yield? So all these people were joining because they thought they were getting 50 to 60%. As you can see right here. So just like 6 hours ago, and since like day one of this, you see this, have a look, zoom into this, see how 64%, it says 64% here, friends. That 64% also had the fee amount. So that's what everybody thought they were participating in, right? But now the real number, immediately when they updated, it was down to 8.87%. But I want to show you something interesting. As soon as people saw, they go, oh crap, we weren't getting the fees they said we were getting. It was incorrect. That's why I made this post to show you, right? Look at, follow the green line. You see how the yield was 8.81%, and now look at this. We go down, look at this. It's now 9.63. And in fact, I'm watching it right now. It's actually gone up a bit more. It's up to 9.75%. Look at that here, all right? So what's actually happening? It's people are now seeing this. See, look at this liquidity on the left-hand side. See, the liquidity was $4.46 million. Now it's $4.13 million. So basically 10%, so $400,000 of people where they're like, you know what? I would rather stake. So they said, this yield is so low, I'd rather do staking. And if you'd like to, you go to go.hex.com and you can stake. So this is the front end, go.hex.com. And if that doesn't work for you on Ethereum or PulseChain, it's supposed to be updated now, but you'd go to app.icosa.pro and you would go to the hex part and you would stake. Now, of course, I'd like to share with you, the yield on this is 9% for super short term, but if you stake it for like 2, 3, 4 years, you can get like 20, 30%. So that's why people are saying, you know what, screw this game. I'm going to have to wait anyway. I'd rather just take it out and stake it safely. So now you can see why this makes sense. So the liquidity that people were having, it was overly thick, right? Which is, it means it was overly thick because the market pricing, so, you know, you think about yourself, like, why would you provide all this risk for 8 to 9%? It makes no sense because the risk of the ratio disconnecting is so great. You're going to get impermanent loss. You're providing exits for other people to take off your hands. You're putting your pHEX in the pool and people are exiting to take it out, exchange for their eHEX. And this is exactly the chart they're looking at. So this is what's gone through everyone's mind. Now, I'm not doing this. I'm staying in here. It's fine because, I mean, everyone's got this. I put on a weekly chart, friends. I put on a weekly chart. I don't care. You see this rectangle? This is literally 1 year after the Bitcoin halving. This is what I'm waiting for, okay? I don't really care about these little ones, these little moves coming in here. But I'm just to let you know, these are your options. So the reason why people are exiting here, it's down here. People are nervous and they're scared and they're thinking, well, if I don't get out now, what if I wake up tomorrow and Richard says, you know what, I don't like eHEX anymore, and it just goes down to zero. So that's the risk people have in their mind. Now, a lot of people put down your water pistol. A lot of people say that's not going to happen. Well, just look what's happened in the past 60 days. Anything can happen, okay? It's only responsible as an adult or a duck to actually tell you what can happen. You saw people react hypersensitive to any word he says. I saw Richard Hart posted, Ricardo Corazon himself. He said, it looks like the market has chosen pHEX. He basically just said that, and then literally people immediately dumped their eHEX. They literally were listening to every single word of his. So back to the eHEX, pHEX farm. So even though it's 9.77% now, just remember, as the volume picks up, and the volume is very low right now. The volume is tiny, okay? So I'm expecting, this is just me, I'm expecting this number to go up 3 or 4x. So 27th, but this is my guess. This is me guessing, all right? Guessing, forecasting. I don't know the future. If you don't want to sit in this game, you are free. Just remove your liquidity and then just go stake. You can do that. But everybody who wants to be a part of this game with a bit of their bag, that's why you don't do everything at once. Leave some staked if you want to participate in this. But this is what's going on. I'm here to share with you and teach you what's going on with these farms, because no one knows. When all these other stuff get thrown at you, it's going to be more complicated things in other crypto platforms, etc. You got to understand the basics. And it would be a good experiment now to think about, what yield do you think would be the fair price? This is something I think about. So for me, I would, like, if this number was 20%, you can make a case for it. You go, well, it's 20% in the down times. There is risk of it going down. You get compensated if the yield goes up. There's uncertainty. But if the volume picks up, you more than make up for it. And you are providing a service for everyone, and there's risk with this. So that to me is the fair price yield for this. Now, I'm just trying to guess everyone else's mindset. So that's why I'm still holding. I don't really care. But in this V2 part, I think this is basically too much liquidity for the yield it's getting. But we have to see, maybe everyone's just bullish and everyone's like, you know what? Screw it. I'm just going to leave it in. Personally, I'm leaving it in. That part in there is just going to remain in there. I've allocated that to that. You can leave, friends, just leave everything that you want. Have your stakes. Leave your stakes there. You don't have to participate in any of these games, but this is the type of mechanics you really got to learn and see what's going on. How are people moving money? What are they actually thinking about? The ratio, how they think they're pricing. It's super important to keep on top of this. And another example is the eHEX Pulse Yield Farm. So this is not even a farm, right? It's just the liquidity pool. It's only 5%, right? And there's $4.5 million in here. So 5% is way too low because you're only getting 5% of the fees. But if you go to the yield farm, okay, for Pulse and PulseX, it's 21%. So you're getting guaranteed fees, 21%. Obviously, 21 is larger than 5. There really should be almost nobody in this yield farm of PulseX and Pulse because it's so low. Think about it. Even if the platform does 3 to 4 times more volume, what's 20% going to do for you when it's 20% on a maybe? You're getting 20% now, right? So 20% on maybe it starts doing those fees in the future makes no sense. And you know what another thing is? If the volume picks up, you can just move your farm over immediately on that day. So personally, there's no reason to be in this V2 at all. None. Unless, of course, they add the ink farms, but they're not doing that, right? So Ricardo Corazon only has V1 ink farms, and that's where most likely all of these people shouldn't even be in here after discovering this. And you're probably wondering why they're in here in the first place. Well, it was saying 35 to 40%. So people thought they were getting compensated for being in this little riskier part, but they actually weren't. And another interesting thing to look at is eHEX, pHEX, and Pulse. Now, I'm watching, look at this. You see this? Minus 20% liquidity. People are pulling it because the yield used to say much higher. It used to say like 40 or 50% or whatever it is. Now it's down. The real numbers come out. You see this number, it was actually lower than this. This number's 15%. When I checked it before, I think it was like 10 or 11%. But people are pulling. So because people are pulling and making it thinner, there's less competition. However, 15% here is still less than the ink farm. The ink farm for eHEX Pulse is 31, 32%. So there is literally no reason to be in there whatsoever. And as a very nice summary for you, thank you very much for keeping your back straight and keeping your elbows pointy and existing in a dusty room. I will personally, this is me, right? If I had a portfolio, I threw everything around, just to let you know, from all the information we've seen, I would personally hold eHEX and pHEX in V2. There is a risk. It all goes to zero. Of course it is. That's on you. Okay? There's that risk there. I will personally hold it, anticipating that the volume in PulseChain picks up. The volume is only 27 million. I'm expecting it goes up to like 100 million, 150 million per day. And when that happens, the fees more than make up for it. However, if you had V2 selected for PulseX and Pulse and pHEX and Pulse, because the ink farm is guaranteed dripping in every day, the yield of the fees don't compensate for it today. You never know. It might in the future, but not today. So I would personally migrate it back. That's what I would do. Okay, so there's two things you do. Okay, you're holding one and you migrate in any of these other farms if you were in there. Of course, All of these, you can save so much headache. Just stake your hex, play it nice and safe. These numbers, we're playing with percentages here, friends. This is why I told you the game is long-term holding. The gains are going to come when we go absolutely ballistic to the upside moonshot. And this ties in, friends. Look, you know, there was a Dogecoin millionaire. He's a gentleman named Pro. Okay, now Pro made a poll on Richard Hart, right? The Dogecoin millionaire. I think he started loving Cardano. Look at this, okay? Two good points here from his poll. One, he finds the next big things. He found Doge early, right? He believed in Doge, went on TV, okay? So look at this poll. It says, do you like Richard Hart and why? 70% yes, 30% no. Interesting. Someone showed me this and they go, man, that's really bad. I'll go, no, it's not. That's not bearish. That's bullish. Look at this. Look at point number two. Point number two. 30% of people dislike Richard Hart. Ricardo Corazon, right? Wait till they see the size of his beak. This is very bullish because imagine what happens to Hex, Pulse, and PulseX if it switches from dislike to love, right? When someone is already loved 100%, you can't possibly get any more popular and loved. Elon Musk, 99% approval rating. There's no one else left to really on board. You always got to think about it like this, friends. This is why there's asymmetry, you know? Imagine one day, what do you think the prices will be if it was 99% and only like on 99% yes, 1% no, right? We might be like 30 to 50x higher. And a very basic guess, a very basic target based on the next BlackRock, Bitcoin spot ETF, halvening, whatever they want to label it as the reason for the rally. I think it's very, very reasonable to expect a swoop up of Pulse at some point, a 10x. We plop around, we've onboarded more people, there's more activity on the chain, more projects have launched, there's more tokens switching, everyone's bonding. These things only increase as the bull market heats up. I mean, remember, the PulseChain whole system was timed with the launch for this, right? You launch at the bottom of the bear, so it only gets better over time. We'll probably be very, very surprised with how quick the activity picks up as Bitcoin and Ethereum start screaming higher. And the absolute last thing for you, friends, I am still personally DCA bullets. This is my preferred thing to do. 20% Pulse, 20% PulseX, 20% pHEX, and 40% eHEX. This V1, V2 debacle, none of it changes anything, right? I watch the charts. The chart doesn't tell you anything but the truth. It's what the market sees as the fair pricing for everything. So yes, it can go to zero, but I don't really care. Okay, this is personally me. I will DCA and just grab everything. Just because ratios go up and ratios go down. Okay, do I need to remind everybody how many people became a PulseX maxi at the literal top of the ratio? It was literally 0.50 and we've just gone down only since. So that's what happens. You know what's funny? It's just how it works, man. Before PulseChain launched, everybody was a Pulse Maxi. Every single person. It launched here, 0.25. It was down here. Everyone said, Pulse is great. PulseX is trash. And then someone with a duck may have pumped us up all the way up. Now you have a ratio of 0.5, which is huge. PulseX is 50% of Pulse price. And surprise, surprise, everyone said, you know what? We need the DEX. You want to own the casino. See, everyone just changes the words they use. And now we're coming back down. What's everyone saying? They go, well, the volume's trash. It's not that great. So when you're listening to everybody's words, just remember they're reflecting the candle color. That's why I would just choose. I just rather just get everything just in case the spreads blow out and deviate and swoop around another way. Because look, there are people out there, they're all in on one. Okay, if you're all in on one, well, they have 50% chance of being wrong, man. What if, so there's a lot of people, right? They're holding PulseX, okay? They don't want to touch Pulse. Well, what if PulseX Pulse ratio, what if it goes back down to where it started? Okay, you're going to be fuming because now you're in the buy zone, but you can't buy PulseX because you already have it. You didn't leave a bit of Pulse on the side to spend it down here. So you've learned a lot very much. Friends, thank you very much. I appreciate every single one of yous all the way. Like, subscribe, press the bell button, all. Tell mum and dad. Nothing to worry about. We're still going to make it. You are appreciated. Straight back, fluffy slippers. I love ya.